Crypto. All the crypto news in one place.
Be patient. Bitcoin is digital gold. 95% of people don't own any yet. And even more than that, over 8 billion people exist in the world. 95% of the Bitcoin that will ever exist has already been mined. 95% of the global population owns 0 Bitcoin. Plus, the global population increases about 1% per year. Culture is trending more digital. It is just hard to imagine Bitcoin stays below 100K forever.
One thing that's not good, though, is the ETF flows. Last week for Bitcoin were red. This week so far, 142 million red. Last week, red too. This is not good. I like to look at the weekly chart to show the flows because day-to-day things can change. Weekly tells you a better picture. And also, Bitcoin is down 2%. Now, it was down 4% last week. It's down 2% this week for the month of December. So it's actually getting a little bit better. Again, not cataclysmic. If we just go up another 2%, we could be 0 for the month of December. And that would be a win. And that could set us up for a nice 2026. Not spreading hopium, just facts.
AIXBT. Winter Mute bought 2,622 Bitcoin in 10 hours, pulling $230 million into Bitcoin at 87.6K. $27 billion in options expire on December 26th. When we get past OPEX day on Friday, that's probably what opens the door for some kind of relief rally. You got to hope anyway, right? Right. I mean, everyone's got to be done with their end of year selling by now, right? Right, guys? Anyway.
Quantum. This is a growing risk, but not a threat in 2026. Right. So what are the predictors saying?
Yeah, so this is Grayscale, BlackRock, and a couple others, basically all saying that quantum is going to become a growing subject, but it's not a risk in 2026.
We know it's not a risk in 2026. Yes. That's also very safe.
Very safe prediction.
But quantum breakthrough and Bitcoin vulnerable will probably end up in the same sentence, and retail will probably panic. Another face of the quantum threat relates to the so-called zombie coins. Approximately 1.7 million BTC sit in early P2PK addresses from the Satoshi era, the first few years of Bitcoin's existence. These addresses expose their public keys directly, making them theoretically more vulnerable to quantum attack than modern wallet addresses.
Number 3, ETFs. Bitwise predicts more than 100 crypto-linked ETFs to launch in the United States this year. Galaxy said more than 50 spot altcoin ETFs plus another 50 crypto ETFs. What they mean by that is like non-single coin, so like basket ETFs, basket of crypto assets launched in the United States. So pretty congruous between Bitwise and Galaxy, just the explosion of ETFs. Galaxy predicts US spot crypto ETF net inflows exceed 50 billion in 2026, and a major asset allocation platform adds Bitcoin to standard model portfolios, which effectively means that like Bitcoin ETFs get embedded into model portfolios at strategic weights, like 0.5%, 1%, 5%, hopefully 5%.
Their point of reference there too is MVRV is in the add zone. This is for people who are building long-term positions. You typically don't want to buy above an MVRV of 2. Right now, the MVRV is 1.5. It's very nice to buy under a MVRV of 1. That's super juicy, super cheap. That's the kill zone. That's where you just start selling organs and stuff and just FOMO into Bitcoin.
It has nothing to do with 4-year cycles. It has everything to do with Fed policy. This was the second only quantitative tightening period we went into. It was even worse than the last time. And last time when it ended, we got a bull market. We got liquidity. And right now, we're getting the first signs. It's only been 23 days since QT ended. We're getting the first signs that liquidity is slowly entering into the system.
If growth crashes while inflation stays sticky, the Fed is trapped. Cut rates aggressively and you reignite inflation. Hold steady and you watch the economy bleed out. As such, I wouldn't count on the cavalry coming this time. And this matters because Bitcoin trades on liquidity. Research by Lynn Alden shows that BTC moves in the same direction as global M2 money supply 83% of the time over any given 12-month period. When central banks print, Bitcoin pumps. When they tighten, it shrivels. A stagflationary environment, weak growth, sticky inflation, no QE, is the worst possible backdrop. And there's an even nastier wrinkle. In late 2025, Bitcoin maintained a 0.8 correlation with the Nasdaq during drawdowns, but failed to match it during rallies. Analysts call this negative performance skew. Bitcoin captures the downside of risk assets without fully participating in the upside.
So we have Charlie Bailio about gold. Gold is on pace for its best year since 1979, up 69% in 2025. Okay, but what they don't tell you is that, gold was at $1,900 in 2011. Okay, so now it's up, almost a 3x since 2011. Bitcoin is up 24,000%. Did it get that? 24,000%. So have fun with your gold, have fun with your silver. I'm sticking with the asset class that I know the exact supply of 21 million.
All-time highs for literally everything right now except for crypto. Why have you forsaken us, Satoshi? Why? Actually, don't come back now, Satoshi. It's not the time. Okay. Wait till Bitcoin's $1 million. And then when you move some Bitcoin, we drop 50% on a day, like everyone freaking out. Be fine. Be fine. Not today, Satoshi. Not today. Anyway, jokes aside.
So first things first, as we can see here, the traditional markets are doing pretty well. S&P 500 up about a 1.5 or so over 5. Let's see. No, it's actually over 1 day, 5 days, 1 month. Things are looking pretty good for traditional markets. Gold looking great as well. Crypto, digital assets, Bitcoin, not so much. And looking to see here using Ben's chart, bull market support band. Well, we fell beneath that a long time ago when Bitcoin was over 6 figures, and it continues to chop sideways and even sweeping the lows. So that's what's going on in the markets. But what is going on as far as long term?
Isn't seeing a rise is Bitcoin. And many think it's going to happen eventually. I think we're still in the process of a relief rally, whether the relief has been completed at $94,500 or there's a little more room to run here into, say, roughly around that 100, maybe the mid 100s, 105. Yet to be decided. We still need to break through $95,000, so the last tops here. Otherwise, this is looking quite weak when all other assets are still looking relatively strong. Huge day up for silver, big day up for gold, new all-time highs for the US stock markets. Copper's up, energies are up, everything is up, Bitcoin is down. And it's down along with the US dollar, which typically you would expect that if it's going to be a flight to safety, in the case of Bitcoin, then you would expect Bitcoin to rally when the US dollar is going down. The fact that it's not doing that shows its overall weakness.
Especially compared to all the big traditional asset classes which are up this year. Silver is up, gold is up, the S&P 500 is up, the Nasdaq is up, the Dow Jones is up, but Bitcoin is down. Everything has outperformed Bitcoin in 2025.
But what we're currently also seeing here, like you can see on the chart right here, we're seeing a hidden bullish divergence play out on the gold chart here. Not a regular bullish divergence playing out on the Bitcoin divided by gold chart on the 2-day time frame. And historically, every single time this played out here, Bitcoin basically catched up with gold again here. And if Bitcoin is going to catch up with gold, and you can see this gold chart, it is going to be meaning something very great here. So what we're literally seeing right now on the chart is, of course, a lower low on the chart and a higher low on the RSI. So we're creating a bullish divergence, and this happened in many bottom situations, like over here in February 2025. We create a major bottom, and of course, Bitcoin rose extremely hard towards the upside. This has been the case many times before.
Currently, commodities is where money is, and I've seen a specific chart over on crypto Twitter drift around a lot. Where we go into the price of gold and a fractal that gold made, quite a long time ago, right? This is not a recent price action. This is from many years ago.
So Bitcoin has been, to put it lightly, stuck in traffic on Struggle Street for a while now. Now, a lot of times when you form these tops, whether you want to make the comparison to 2022 or I actually kind of prefer the 2019 comparison, if I'm being honest. And one of the reasons why I like that comparison is it just seems to match a lot closer, like this bear market with the one in 2019. The other reason is because when you top on apathy rather than euphoria, you don't have like the same type of selling pressure. There is still selling pressure today, like there was back in 2019. But when you're not topping on euphoria, you don't have all these fresh retail investors that are panic selling on the way down.
Going into Bitcoin, Bitcoin is at $86,600. Last night, I told you, don't get excited. Don't get excited because Bitcoin was pumping. We were right over here. We were going above 89. We were in the $90,000 price levels. I told you, don't get excited. Don't FOMO. Bitcoin likes to play tricks, right?
If we're zooming further into the short term, taking a look at just this 6-hour Bitcoin price chart, we can see that over the last one day, we've now seen yet another perfect rejection from this line right here, which was previous support and is clearly flipped into new resistance over the last few days. For almost a week now, give or take, we have obviously been struggling a lot around this line of resistance, and that's sitting at roughly 90,000. And if we're especially looking at the candle closes here on the 6-hour Bitcoin price chart, that's pretty much exactly where the price rejected from 90,000.
Bitcoin is in between. We are at a super critical level right now, man. Check this out. Weekly FVG reclaim opens the upside. Loss of structure increases pullback risk. So you can see where the price of Bitcoin is right here. Okay. This is the 2021 peaks. This is the peak of 24 ETF trade. This is support in 25 in April. This is support line touched again. This line is the line of lines right now, incredibly important. We lose that, we are in big effing trouble.
So maybe Bitcoin revisits 100K, and then that marks the macro lower high. As we've seen before, if you look at like the 50-week moving average, there's a lot of examples when the bear market does get underway where we backtest that 50-week moving average. You can see the example in 2018. You can see the example in 2022. And right now, the 50-week moving average is currently trading just above $100,000.
If we're taking a quick look at the Bitcoin liquidation heat map, we can still see a lot of liquidity building above the price of Bitcoin here in the somewhat shorter term, sitting at just above 90,000, really closer towards 91,000. So at around 90.8K to 91K, give or take, we still have a decent amount of liquidity building right there here in the Bitcoin liquidation heat map. So that's still a price target to watch out for.
But truly, whenever we break below this volume support box, there's literally no volume support laying below us. So that means that if Bitcoin breaks this support box, it is going to be most likely that we're going to be falling down towards that 72 to 74,000 US dollar region. And of course, that level is also exactly corresponding with, of course, where the liquidity in the market is laying.
And as it continues to drop, there's a lot of people out there screaming that that can't be the top because they didn't have an alt season, right? And it's kind of like a strange view to say that like Bitcoin owes you something because some random micro cap that you shilled didn't rally. Like that's nonsensical.
But if we go now and look at altcoins, I really want to talk about altcoins. Nearly 97% of altcoins on Binance are trading below their 200-day moving average, one of the most oversold readings on record. Historically, such conditions have marked deep accumulation zone. And I don't say this lightly. Not only have they marked deep accumulation zones, I will say they've marked deep uncomfortable accumulation zones. Very uncomfortable. Right now, where we are is very uncomfortable.
But ultimately, what I'm just looking at here is this Bollinger Bands on Bitcoin indicating a big squeeze is about to be happening fairly soon here. And to be honest, if I'm looking at the Bollinger Bands here and at the Bollinger Bands width here, I can just compare this level. And if I extend it to the left here, I can see that currently it is sitting on the lowest side of volatility we've seen since December.
So, did you enjoy the zap? Let me know in the comments.